Hello, everyone, and welcome. My name is Alex Tapscott. I'm the co-founder of the Blockchain Research Institute. Today's webinar is titled Investing in the Blockchain Ecosystem, though I expect we will also discuss investing in the technology industry as a whole, as there is no shortage of exciting new developments happening across many different technologies, not just in blockchain. This is an important time, we think, to be having this discussion as we try to manage the fallout from the coronavirus crisis and chart a path for the future. It's true that there is really no greater challenge today that we all face collectively than the threat of COVID-19. It's quite clear that the economic costs have been devastating and the human costs are unfathomable and are still getting worse. And this is something we need to think about. What is very clear at this point is that the world will be a very different place when the dust settles from this. So first, I'd like to thank everyone for joining us. I'm looking at where everyone's dialing in from. I think I saw a few folks from Europe, Belgium, Finland, and elsewhere. Folks obviously from North America and those calling in from Asia, Africa, and elsewhere. We're really grateful for our global audience. This is consistent, of course, with all the other webinars we've hosted. And we're delighted to welcome you all today. A couple of things before I move on to the introduction to this panel today. I'd like everyone to just be aware that the BRI launched in collaboration with Coursera and INSEAD a major, massive open online course focused on blockchain use cases for the enterprise, blockchain for good, as well as blockchain and financial services. That course today is one of the highest ranked courses on blockchain in the Coursera catalog. And over the past few weeks, we've seen our registration quadruple to nearly 1,000 new registrants per week. So if you're interested in learning more about the work that we do at the BRI and you're looking to gain an accreditation from INSEAD, one of the best business schools in the world, I would strongly encourage you to check out that course. And I would also encourage you to sign up for our newsletter. My colleague Yulia is putting some of the links into the chat where you can get updates on everything that our members are doing, all the new research that we are releasing, as well as key insights on the news of the day in the industry. So moving on to today's discussion, this webinar series was launched originally in response to the coronavirus crisis, and it still is a theme that we will be touching on a little bit today. And the reason for that is that the economic costs of the coronavirus are devastating on a scale that's perhaps never been seen, at least in modern times. And we believe that this is one of those rare turning points in history. This pandemic is going to profoundly change our behavior, our society, and of course, it's going to change our economy and the companies that operate in it. Some leaders who failed that test will lose their jobs, and some governments that failed their people will lose their power. Many institutions will come under scrutiny, and we hope change for the better. So the Blockchain Research Institute's mission is to help realize the new promise of the digital economy. It's a new promise because we're in a second era of the digital age, where technologies like AI, IoT, AR, VR, biotech, and of course, blockchain are providing leaders with an unprecedented set of opportunities. But as our research shows, these technologies are now relevant as never before, not just to business and the economy, but to the future of public health and the safety of global populations. Traditional systems have failed, and it's time for a new paradigm. So the next generation of companies, institutions, and projects, perhaps funded by the panelists who I'm going to introduce in a moment, will help to reshape the future and usher in a new era, one that we hope will create an economy that works better, but also works for everyone. To borrow from Victor Hugo, nothing is more powerful than an idea whose time has come. And we believe the time has come for us to rethink basically everything and rebuild from the ground up. So with that, I'm very pleased to introduce today's participants. The first, Brian Estes, the CIO and managing partner of Off the Chain Capital. Brian has helped finance, build, and mentor 4 blockchain companies whose combined value is now over $10 billion today. Prior to his involvement in the blockchain space in 2014, Brian was a leading endowment and foundation asset manager, ranking in the top 0.1% for the Morningstar Asset Managers ranking between 2004 and 2014. Brian has his BA from the University of Illinois and an MBA with high honors from Washington University. Brian also studied at Cambridge University and the London School of Economics, And just for fun, Brian has been an instrument-rated private pilot for 30 years and has over 2,100 flight hours. Our second panelist is Amit Pradhan. Amit's a seasoned startup founder, investor, and speaker who spends his time creating, evangelizing, and investing in the future of responsible AI and decentralization. A 20-year veteran of Silicon Valley, Amit is the co-founder and president of the Silicon Valley Blockchain Society, a network of some of the largest investors, thinkers, practitioners, and creators with chapters around the globe. As the executive chairman at Zero AI and Rainfall, he and his team are pioneering the idea of privacy-focused AI. Through Jet Ventures, a cross-stage international fund, Amit invests in startups that use the power of exponential technology to become a positive part of the daily life of humans around the world. So needless to say, we are blessed with an embarrassment of riches. There's so much to cover, and I'm delighted again to welcome our panelists to the discussion. Brian and Amit, thank you for joining us. At this point, I'd ask for you to unmute yourself and join us on the screen, and we can kick things off. So Brian, the first question is for you. You had a career before you got into the blockchain space in the traditional world of financial services. But in 2014, as your bio suggests, you began to focus a lot more on this space. So what is it about blockchain that interests you as an investor?
So I came from traditional finance, like you said, and when I first learned about Bitcoin and blockchain in 2013, I kind of made fun of it. I thought it was, a scam or some internet funny money. And it wasn't until I really dove into it in 2014 where I really understood the power of what blockchain technology could do. And it was right after I read the Satoshi Nakamoto white paper, I could almost see as clear as day how we were going to rebuild our financial system on blockchain technology. When I was in high school and college, I used to code. I have multiple software patents, and that combined with my 30 years of finance, it just clicked with me that we're using this legacy financial system we've been using for 50 years that basically hasn't been upgraded, and blockchain technology allows that upgrade to happen.
Amit, how about you? You're a Silicon Valley veteran. You're obviously involved in a number of different technology initiatives, AI and others. What is it about blockchain that interests you so much that you created this important organization, the Silicon Valley Blockchain Society?
Yeah, thanks, Alex. Thanks for having me. Two things. My background in AI had me focus a lot on aspects of responsible AI, and specifically we were thinking about privacy in a world where AI was taking over so much of what we were saying, what we were doing, our movements, etc. And in the work that we were doing with privacy, we started looking at the data model around AI, a data model that is vastly focused on centralization of storage, centralization of compute. And we realized that any aspirations of trying to have a privacy focus is completely shredded if we don't think about the decentralization of who controls that data. And about 7 years ago, starting to look at the technology of the blockchain and all of the aspects of decentralization, drove us in recognizing the power of decentralization. The second part was looking at the world of blockchain in 3 stages. One was the underlying philosophy, and I think that often gets lost in the conversations around the pure technology or the economic models that they unlock, right? So we get into conversations around tokenization, we get into conversations about, whose protocol is better or more appropriate. And if you look back at the history of decentralization, actually it predates Satoshi's white paper whenever she wrote that, but it actually goes back to efforts around decentralizing, commodities. And so you had efforts around gold driven by regions of the world that have either authoritarian regimes, right? So you look at a lot of the original developers in the space, you see a lot of people from the erstwhile Soviet Union. You see a lot of original crypto developers from places like Argentina, and you can start seeing common threads where either authoritarianism or uncontrolled economic control on currency has largely destroyed any aspirations of youth, especially technically talented youth. And that philosophical piece tied into where we're going with the technological implementation of it has now unlocked some incredible economic models for us, right? And not just models in how we do the future of supply chain, or how we think about how we're going to roll out currencies, but also dealing with the most vulnerable in society. And there's a bunch of projects we're seeing roll out in that space. And so going back to your quote, Alex, of Victor, about ideas and people, I actually love this quote by Carl Jung, which says, people don't have ideas, ideas have people. And in so many ways, if you think about what's happening, what has happened over the last 5-7 years, but certainly what's happening right now, we've come to that wonderful point where the ideas have us now. So for me, this was kind of the genesis, in both from a technical perspective, but also from a philosophical perspective.
Well, that's very fascinating. And the two of you, Brian, I don't want to pigeonhole you as a finance guy, because you're obviously much more than that. But it seems as if the two of you are approaching this from very different perspectives. One from a technology perspective, and the other one looking at least many industries, but the financial services industry is one that's very ripe for disruption. So I want to go back to you, Amit, in a moment to talk about some of the technology aspects. But Brian, let's talk about the financial services industry. I also used to work in the financial services industry. I was at the investment bank, Canaccord Genuity, where I worked on an equity desk for 8 years. And it was while I was doing that that I began to realize just how inefficient a lot of the clearing and settling, custody and other functions of the stock market were. And the more I looked into it, the more I realized that this wasn't something that was unique to my little corner of the financial services industry. It was something that was endemic. And so the analysis we've done at the BRI and in the books that we've written tries to break down the industry into different component parts, right? Everything from KYC and AML, which is a thing that the industry actually does, to basic nuts and bolts of retail banking, like moving and storing value and accessing credit, to capital markets, risk management, insurance, accounting, and everything else. And I wonder, can you talk to the areas where you see the most potential for not just tinkering and disruption, but the wholesale reinvention of aspects of the industry? What are the areas, based on your extensive experience in the space, that you think are the most exciting opportunities?
So you mentioned one of them, clearing and settling. So most people don't know, like back in the early 70s, the stock market used to be closed on Wednesdays. And the reason it was closed on Wednesdays is so you can catch up on and settle the trades that happened on Monday and Tuesday. And the trades that happened on Thursday and Friday would settle over the weekend. But when I first started in the industry in 1990, it took 7 days to settle a transaction. It was trade day plus 7. And then they moved it to trade day plus 5, and now it's trade day plus 3. But with blockchain, we should be able to settle trades instantly. And so I think that's one of the major use cases. And what that will do is that if I like buy your Apple stock and you're selling it and that settles in 3 days, our brokerage firms have to put capital up at risk to guarantee that trade for 3 days, right? So you have all this unproductive capital just sitting there guaranteeing these investments. But if we could clear that trade in 10 minutes, then that capital is free to be repositioned somewhere else that's more useful. So, there's, billions of dollars at risk that could be repositioned in more useful activities. So that's one use case. Another one are just cross-border transactions. Right now, the correspondent banking system has basically a monopoly on transferring money around the world. But with blockchain technology, we all know now, like with Bitcoin, we could transfer that to anyone in the world within 10 minutes. And it's it's almost free to do that. So that's another major use case of blockchain technology. It's just the freedom and the low cost to transfer money around the world.
So going back to the first one, I just want to understand a little bit better for our audience, especially. You're talking about securities, traditional financial assets that can be moved and stored in a similar way to crypto assets, which is to say that they could be traded peer to peer, where clearing and settling is basically one thing that happens instantaneously. What do you think needs to occur for that to become mainstream? You pointed to a specific example, your Apple stock. Do you think it's more likely, sorry, this is two questions. Do you think it's more likely that existing stocks and other financial assets, the shares in Apple, for example, are rewired in a way to allow them to use some kind of blockchain platform? I'm not sure which one exactly. Or is it more likely that new securities and new assets, sort of new origination, that are native to blockchain eventually become so big that everyone else sort of follows suit? Is it coming from the innovative end of the tail, or is it going to be something that can happen inside of existing big financial institutions with existing financial assets?
So the easy answer is both, right? So both of those are going to happen. So one of our core investment thesis is that over the next 20 years, that everything will be tokenized. And so it won't just be stocks and bonds and securities. It will also be the Hope Diamond and the Mona Lisa and the Empire State Building. And it'll be employee contracts like NBA players and NFL players where they tokenize their employment contracts. And then our investment portfolios in the future will look totally different than they look today. So right now we have stocks, bonds, real estate, but in the future I may have like 1% of my portfolio in fine art. So I own Mona Lisa, a Monet, and a Picasso in my, that it's been tokenized. Or I want to have 5% of my money in income generating investments like LeBron James contract and, like some other, NFL player or NBA or hockey player. So that's our thesis, that eventually everything gets tokenized and all these assets become possible investment opportunities for investment portfolios over the next 20 years.
Interesting. Just a reminder to everyone who's signed in and listening to this webinar, feel free to ask questions for our panelists in the chat, and we will try to get to them all as best we can. Amit, since you and I are exchanging quotes and aphorisms, there's another one I wanted to throw out there, which is some people say, well, not some people, someone specific said, the future is here, it's just not evenly distributed. And I think a lot of that, it's often used in reference to how uneven technology develops in different geographies around the world. Now, you've got a unique perspective here. Jet Ventures has got an international focus. And I'm wondering if you can tell us a little bit through your experience where you've seen some of the most interesting innovation occurring around the world, and also, if you'd like, it within individual industries.
Yeah, so I think, like, when you look at the, as you were talking about the potential use cases with Brian, right? You can spread those across a whole area of verticals, but also horizontals, right? So if you think about, the future of health within everything that's happening with infectious disease, like the wider spread of it, and then physical health, think about spiritual health. You think about the future of work, look at what we're doing right now. Use cases are really, really massive. But what we're starting to see is some really interesting resonance and interest areas by geography for what has been priority for different regions, right? So if you look at governance, the Western Hemisphere has talked about decentralized governance a lot, but no one's doing anything meaningful, right? And then you go to places like, Dubai, the UAE in general, and you're starting to see kind of smart city governance. You're starting to see all of people's government records starting to go, the DMV equivalents, ID cards, etc., land title ownership, all starting to go, onto the blockchain, right? In places like India, there's a lot of focus on, things like climate solutions, also things around centralized ID starting to move decentralized, And we're starting to see a lot of interesting focus from companies. So you look at someone like Silo, right? And Silo has been a really popular product more recently. They're trying to do in many ways what the original vision of Libra was. And they really deeply focused on Africa to begin with. And there's a deep resonance to the idea of being able to transact just using your cell phones and SMS. M-Pesa was such a big success in Africa. Um, so when we look at the opportunities, especially from not just from a Jet Ventures perspective, but also from an SVBS, we do have a very large global network. It's really interesting to see there's some common threads you see across the board. Like we're seeing a lot of really interesting protocol layer projects come out of the Eastern Bloc, the erstwhile Eastern Bloc, and the Balkan Bloc of Europe, much like you would see here in the US. You're starting to see transaction models come out of places like Africa and South Asia. And then one of the common threads we're seeing across everything is while 2016 to 2019 were deeply focused on, we're just a blockchain play, right? And people building stuff around the blockchain, to getting to the point where we're saying, look, let's look at actual use cases, right? Whether you look at enterprise use cases or whether you look at consumer use cases, or even if you look at foundation nonprofit use cases, when the rubber starts to meet the road, you realize that if you want to solve for something meaningfully and you're actually solving for the problem, then you can't just be an isolated blockchain play. Either you're building aspects of IoT integration or you're building aspects of AI. And more and more I've seen that the thesis that everything we're doing involves data, right? And so you have to cater to where that data is coming from. The sources of data, largely that's your IoT market, right? That data is relatively useless if you cannot contextualize it, if you cannot meaningfully aggregate it, if you cannot treat it in a predictive model. That's where AI comes in. And then going back to what I was saying earlier, where the decentralized movement comes in is this idea that all of that data can't just be sitting with what I call GAFA-BAT, Google, Apple, Facebook, Amazon, Baidu, Alibaba, Tencent, and Tesla, right? So even when you think of this, you talked about Corona, and you think about, there's so many aspects of what infectious disease has thrown up for us, both as challenges, but also as incredible opportunities, right? So right from original detection of a new virus to its testing, to tracing and tracking, right? And tracing and tracking is really interesting because you can have the tracing and tracking model a la Google and Apple, which is very easy for them to do because we live on their devices, fortunately or unfortunately. And then you look at the idea of, a zero knowledge proof based tracing tracking, right? Where you don't need to know anything other than, am I positive? Were people around me? And they need to be notified and they need to go out and either quarantine or get tests, right? And some of the approaches that we're starting to see the blockchain world take, but coming from an IoT and AI perspective, Nodal is a company that's part of the SVBS ecosystem, well-known founder, and they're using Bluetooth in the same way that we're now talking about traditional tracing and tracking, but with zero knowledge proofs to be able to just check, were you around someone who tested positive? And no one needs to know any other data about you, how tall you are, who you had lunch with is irrelevant in the context of saying, what, these four people need to be just told that you were exposed and, take A, B, or C action, right? And you can
Love it. Someone's just asking, what was the company that you just named that is trying to do that? Do you mind repeating that?
nodle.io, and they actually are doing this as a not-for-profit initiative called the Coalition Network, just Coalition, the Coalition Network.
Yeah.
So it's not
I want to just pause. I want to just pause you there because you raised this really interesting point. A lot of interesting points. One was that I think the coronavirus crisis has caused people to put themselves into that framework where it's either a choice between safety or health or privacy, and we have to make a choice between these two things. And it may be true that if big centralized technology companies and governments are the ones who control all of the data, and the ones who have the ability to roll out something like a track and trace app, that may be a trade-off that we're making. But what you're suggesting is that that's in the context of blockchain, this is a false dichotomy, where perhaps we can create systems that are decentralized that allow us to address these socialized problems that affect the group, while also maintaining the safety and integrity of individual privacy, which I think is an important theme. Another thing that you identified there was the transition from what you called, I think, pure blockchain plays to something, to things that are more specific to certain use cases. And I want to just pivot to Brian because as an investor, and I've also done a lot of investing in this space. In 2017 and 2018, most of the new money that was being raised was going into the digital assets of protocols, right? So the idea that you would build a new blockchain that could be multi-purpose, could be programmable, could have certain inherent features like, say, I don't know, the ability to interoperate with other blockchains, or the ability to scale, or the ability to integrate with enterprises. You know, everyone had their own different spin. And there are some projects that emerged from that era that I think are quite exciting and quite interesting. But I think that people kind of got blockchain fatigue where, you know, at a certain point, it's like, enough with the protocols, show me the applications. So Brian, I want to talk about where you guys are at now, and thinking about investing in the space. Is the technology infrastructure there? I mean, is it, do we need another protocol, or are we ready to focus on apps and use cases? And if so, what are the areas that, you know, are attractive to you today as an investor?
Yeah, so I think it's still too early to think about apps set on top of the protocols, because we're still building the backbone and the pipelines to, you know, allow all this to happen. So you need infrastructure to be built first. And those projects that were funded back in 2016, 2017, that provide that infrastructure, they're getting ready to launch. So, you know, if we can talk about names if you want to, but, you know, you know, that infrastructure is getting close. And so I would say over the next 6 to 12 months, we'll see those things being activated. Once we have the infrastructure in place and the pipelines and the backbone.
So the ones, sorry to interrupt, but you know, there's some that have been activated that sort of got funded during that period, like say Cosmos, for example.
Right, exactly. Yeah.
But there are others like Polkadot or Avalanche, Avalabs, and
Right.
Solana, right? Like these other kinds of protocols.
Yeah, and there's like Filecoin and
Filecoin, yeah. I
so,
wonder, can you tell us what's going to happen when these things are all live? I mean, you know, the tech is undeniably very cool, and the people building it are obviously very smart, and the opportunity and the potential is significant. But is this a situation of, if you build it, they will come? Like, how do you think about that next stage that you're discussing after the rollout occurs?
okay, so our team at Polychain Capital, where I invested as a general partner. So that's what they handle. I don't have the expertise in that. So, you know, I would defer that to the team at Polychain. What we're focused on are value investments in the blockchain space. So for 25 years, we were, you know, I was a value investor using Graham Dodd, Warren Buffett style investing. So there's a lot of mispriced digital assets that are floating around today. And that's what we invest in. We basically try to buy $1 worth of Bitcoin for 50 cents. And there's ways to do that. And that's what we do at Off the Chain Capital.
Are there any, sorry, one more question, Brian, because I just want to pull on this thread a little more. Are there any other assets other than Bitcoin which you can say with confidence, using a traditional Warren Buffett style value investing system, that are undervalued? I mean, the value investors look at, you know, things like book value and cash flow and earnings and these kinds of things. And those metrics are not, they can be fit to the current space, but they're a little bit flawed, right? Because we're talking about a different kind of asset class. So is this for Bitcoin specifically, or can you see that being applied to other assets?
Yeah, like I said, you know, Polychain focuses on the new stuff. We focus on So our core investment thesis, which is different than polychains, is that Bitcoin's the winner. We see, when we use what's called a network value to value Bitcoin, our models show it's significantly undervalued to where it should be. And, when we combine that with being able to buy Bitcoin for less than what the market price is, we feel that that creates a tremendous investment opportunity for people. So that's what we're focused on. We're a Bitcoin-centric investment fund because we believe that Bitcoin is one of the very few winners that will emerge out of all this.
Got it. I want to change our tune a little bit here away from just talking about blockchain to talking about an issue that is top of mind for a lot of people. The world has been rocked recently by protests over the brutal killing of George Floyd, an unarmed black man that was killed by police. I think a lot of people, in many different industries are finally doing a lot of soul searching about whether they've done enough to fight racism and prejudice in their own lives, and whether or not they're doing enough to create opportunities for disadvantaged people. One area where we've seen this occur quite a bit, much to the credit of these individuals, is in the venture capital industries. The VC industry is very focused on building the future, yet the complexion and the composition of the industry very much resembles the past, or at least the present. Too many VCs are still mostly white and male, and so too are a lot of the founders who are able to successfully raise money from them. So what can the VC industry do to level the playing field and create more opportunities for minority founders, and to be more welcoming to people of color and other minorities in the industry itself? I'll open that up to either of you, but Brian, since you answered the last question on it, why don't you take a stab at that?
So I think a lot of this is solved through education. So my wife taught at an inner city school for the last 10 years in East St. Louis, Illinois. And just from her experiences, she realized that over 50% of the parents that sent their kids to, it was a private Catholic school in East St. Louis, that over 50% of them didn't have bank accounts. And which shocked me. I thought like everybody in the United States had a bank account, and they don't. So it's through education, it's through financial knowledge that I think we could help raise people out of this poverty mindset and get them into good paying jobs. And people need skills, and they need an education to gain those skills. So we have a family foundation called the Great Big Beautiful Tomorrow Foundation that my wife runs. And that's what our whole goal is to help provide, the bridge between what the government provides to what they could afford, so that they could get a good quality that people of need, and it doesn't have to be minorities, just anyone of need, that could bridge that gap to get a good quality education. And I think that's so important, because knowledge is power, and and the more knowledge that you have, the more you're able to help support yourself and your family.
Amit, your thoughts on the matter?
Yeah, I think there's two ways to see this, and actually two ways to solve for it, right? So one is, you look at what SoftBank and a bunch of VC firms are doing, saying, look, we've got SoftBank has 100 million allocation now for minority founders, right? And that's kind of this. Our perspective still remains the same. We're still seeing the world the way we see the world because of our past context. But hey, we're going to try and look for minority founders, right? And if you look at that from a, on one hand, great, right? Like no one's going to say that 100 million allocation is a bad idea. But when it happens in a way where you say, look, I'm just going to focus on minority founders because it's the thing to do right now, then from a truly investment perspective, are you necessarily looking at it from the perspective of, this is my thesis for the world of technology that I invest in? Not necessarily, right? So really what this comes down to is the representation in the thinking within in this case, the VC firm, in the context of your question. And part of it is just, you think about access, right? And I think Brian touched upon that as well. It all comes down to going back a whole bunch of layers of this onion that you have to peel across the board. And VC is a great example of it. The reason that VC looks the way it looks is because of the path that traditional fund managers take to end up becoming fund managers. And it is very, very skewed, therefore, towards white male, right, culturally. And when you have that, your networks by natural connection don't include a lot of people of color, or you don't have a lot of diversity of gender. And I look at our example, where at SVBS, three founders primarily. My background is Indian, East Indian. Moved here from Australia, and then David and Carl are both African American, and the number of just by natural cadence, amazing founders that we have in our network who are women, who are minorities by race or ethnicity, and they constantly introduce people into the network who look like that. And honestly, I think it's just one of those lenses that it's not about just intentionality and saying, oh, I'm just going to focus on Black founders, right? It's what you do with your network and your mindset, which is why representation becomes so key. And there are incredible people of color, incredible people of gender diversity that are doing amazing things in all of our ecosystems, right? Silicon Valley is a good example. They just don't have that access path. So I think the outreach in terms of I want to invest in minority founders is only one part of it. And I don't think you're going to do it well if you don't have, minority partners who are making those decisions and are their natural networks are allowing more people of color and gender diversity to come in. And I think that's the key. And so until we see that change with venture firms, then just creating an allocation of 100 million if you're SoftBank is helpful. None of these things are bad, but I don't know that they truly systemically solve for what we're trying to do.
Yeah, I would just like to add to that, just if I could. And I think it starts early too. If you can catch kids when they're in grade school, junior high, high school, that's where you have the most impact. And so one of the small changes that I encouraged my wife to make at this inner city school was, I know foreign language is important, but instead of teaching the kids foreign language, why don't you teach them computer language? Teach them to code, so they have this a skill set that is mostly white dominated skill set, right? Or male skill set that you could, teach, girls and, people of color to, learn how to code so that they could take that ability and go to Silicon Valley and go to Facebook and Google and, get a good job with the skill set that they learned. So, but it starts young. Most 10-year-olds, they're interested in, playing and, doing whatever they're doing. But if you could teach them to code or teach them something, that they could use throughout their life, then, I think that's valuable. But, the point I was trying to make, we have to start earlier. We can't wait until, people are in their 20s and 30s and try to make the change. We have to catch them early to make that change.
Yeah, no, I think everyone made some very good points. Sorry, Amit, what was that?
I was just going to add to agreeing with what Brian was saying. I love this idea of, starting early and this concept of heroes and halos, right? So when you think about why people follow certain paths is because their heroes represent those paths, right? And so when it comes to science and technology, when it comes to, even venture capital, there aren't really, wonderful heroes in the same way that you have movie stars or if you have sports stars, right? And that's why people kind of want to go a particular way. We've done this really interesting work when I was in Australia where, a lot of students had started thinking about computer science, but were not thinking about mechanical engineering anymore. And so the idea that you could get them excited around the heroes of Formula One and the halos of that beautiful Formula One car that had that ability to outperform anything you see on the streets in an exponential manner got a tremendous number of people at, like Brian was saying, who are 10 years old to start saying, oh my gosh, I want to either drive that or be able to build that, right? And what is it? What do I need to do? Well, then you can take them down the path and say, well, you need to become a mechanical engineer. You need to become an aeronautical engineer if you want to get to that point. And I think in many ways, the closest we have to that, and I know that it's a controversial, he's controversial in many ways, but Elon represents some of that hero aspect, right? And so that's why you see so many kids referencing Elon Musk, and SpaceX represents some of that halo of the hero, right?
Mhm.
And you can see people gyrating towards Tesla and being very forgiving about issues with their Tesla cars, because do you want to sit there complaining about your door when Elon's sending astronauts to the space station, right? And so if you start that hero halo concept, like Brian was saying, when kids are 10 years old, it's amazing how you can get them inspired and go in a particular direction.
Well, these are all great points, and there's so much more we could discuss on this, but I'm hearing a few different really great ideas. I mean, number one, you can invest directly into Black founders and companies started by people of color, minorities, women, etc. You can be more active in hiring those kinds of people. Eating your pudding, putting your money where your mouth is. But that there's much bigger social issues here, and we're not here to solve all the world's problems on this one call. But creating a more level playing field for students so they all have access to the same kind of education, and individuals also stepping up to doing that. And Brian, what your foundation's doing is really admirable. And I think I've had a couple people who have asked if you could share the link or any information about that in the chat, because I think that certainly struck a chord with folks. And I think it would be great if they could find out more about it.
Okay. Yeah, I'll type it. It's
So let's
gpfoundation.org.
So GP Foundation?
GBBT for Great Big Beautiful Tomorrow Foundation.org.
Okay, great. Okay, let's move on to some of the questions from the audience here. We've got about 15 minutes left in the discussion. Brian, people are interested in the basketball thing about tokenizing.
Right.
The earnings potential of a sports athlete, talking about heroes and halos after all. Can you tell us a little bit more about that? I mean, it's sort of people wouldn't assume that this is, actually an asset class that you can invest in as a financial investor.
Mm-hmm.
But we've seen some players, Spencer Dinwiddie and a couple of others who have actually tried to do this. So tell us a little bit more about that.
So like you said, they've tried to do it. So the NBA has blocked it so far. But yeah, I would think that it's coming, and I think it's going to be a huge asset class. Because if you think about it, if you're a fan of whatever sports star and you have the choice of investing in like a General Electric bond that's B rated, or I could invest in LeBron James, which in my mind is A rated, and get the amount of income off that. Yeah, I think I'm investing in LeBron James over General Electric. So it's it's because people have an emotional attachment to their sports stars, and so I think if these sports stars end up eventually tokenizing a part of their contract for income producing vehicles, then I think that's an interesting asset class that will develop into the future.
Yeah, I certainly hope so. I mean, nothing would make me happier than to be able to participate in the success of my favorite athletes as they make money. I make money. I think that sounds like a pretty cool kind of opportunity. Let's ask one of these questions for Ahmed. Ahmed, you've taken a really wide aperture on this, and this question I think is appropriate. The question's around robotics and the tokenization of production lines, self-driving trucks, and all the software and hardware that is or will potentially take jobs from people. Should that hardware and software be tokenized and crowd-owned? That's a sort of a pretty big and a different topic different concept than what we're used to. What do you make of that?
Yeah, I love it. I think it ties into, there was an earlier question around even this concept of UBI, right? Universal Basic Income, because at the highest level, what this is trying to do is solve for the challenge that as automation, especially AI-powered automation, both on the software side and with, the devices we have in our lives, gets to a point where it just makes no sense for humans to do those jobs anymore, um, you have to start thinking about economic models, right? And so, we've seen universal basic income, come up during the Andrew Yang Democratic nomination, the primaries, and then we saw that with this $1,200 payment that was made to most Americans, when COVID hit. And we're seeing that now globally, Europe is doing more of those payments. Um, I've been more drawn to this idea. 2 years ago, I started talking more about the idea of the universal earned income rather than the universal basic income. And the concepts behind that are in the question that was asked, which is what if we could start monetizing, because we start having agency in the different devices that are generating value from data that touch our lives. And if we could create a friction-free automated process around that, then that is a more fair way of creating income to the people who are participating, because all of this happens because we participate in different ways. Even in, if you take the example given in the question, robotics for, autonomous vehicles, right? Whether it's production or whether it's, driving, the ability to have those cars create value with each other and where they go, how they go, but driven by either the owner or the person in that car, because we likely not have owners going forward. But in the context of you being the subscriber who's in that car during that time, the value that's generated in that context should be value that inures to your benefit as well, if not entirely. And so I think we'll start seeing many models around that, the idea of universal earned income, that's not something I get for free. It gets because the actions I take, which transition from, oh, I'm a mechanic, or I'm a worker on a shop, or I'm a trader on a trading desk, which is now being done by, but requires my involvement, and the value that's being generated inures back to me as well. So I think these models will see evolve massively.
Ahmed, there's a comment for you in the chat from Michael about a project you might be interested in. You should check that out. Brian, going back to investing, there's been, we can talk about the different kinds of waves of people that have invested in this industry. There were, the really hardcore people who were in the Bitcoin community very early on. That was the first group. And then what we began to saw was sort of the early adopter, and then we got into the retail curve. And now, you hear a lot of discussion about different kinds of organizations. Your past career working in the foundation space is quite interesting, because foundations and other institutions like them have pretty wide berth in terms of what they can invest in, unlike, say, an equity mutual fund, which is supposed to only invest in stocks or something like that. So what's your view on the institutional wave? We're seeing clearly there's many examples of institutions stepping into this, but it doesn't quite feel like a wave yet. What is going to cause that to occur, and why? And I guess more broadly, why should an endowment for a university or a pension fund invest in Bitcoin or blockchain opportunities?
Yeah. So when we opened, so Off the Chain Capital is our family investment fund, and I opened that up to outside investors in August of last year. And my whole goal was to go to foundations and endowments and show them what we were doing. And I thought it was such an obvious investment idea that they would just pile in, and they all said no. And I thought about it over the Christmas break, and I came out with two reasons why they said no. First of all, last year, the markets were up 20 to 30%. So they had no incentive to take any added risk or perceived risk.
When you say the markets, you mean like the stock market?
Yeah, the stock market and the bond market. So their portfolios were up 20 to 30% in 2019. And then the other thing that I ran into was that the CIOs that I was meeting with, and these are multi-billion-dollar endowments and foundations throughout the US, they were all in their 50s to 65, 70-year-old range. And it took them 30 years to get up to that position as a CIO, of hard work, diligence, some luck. They're not taking that reputational risk of allocating 1 to 2% of their portfolio to Bitcoin or some Bitcoin investment that could go down a lot. And then their trustees are breathing down their neck and not paying them their bonus or possibly firing them for doing something considered stupid and untraditional. And so I think those were the two reasons they all passed last year. But what's ironic is that with COVID, with the economy, and with the Federal Reserve basically turning on the money printer and having an unlimited ability to create currency, that a couple of these foundations actually contacted me over the last month and said, hey, we're more open to the conversation now. And so if you look at 2018 and 2019, Harvard, Yale, Princeton, MIT, University of Texas, Stanford endowments, they all made allocations to Bitcoin and the blockchain space. It's the next layer of endowment managers that haven't taken that step yet. And like I said, I think it's reputational risk, and it's just the fact that it's too new for them, and they rather more of their colleagues do it first before they do it. So they don't want to be the leader.
Yeah, sorry. I was just going to say, it could be that this is the inflection point where the risk of inaction is actually potentially greater than the risk of action.
Right. So our data,
the thing that yeah. Go ahead.
No, I was saying our data, which we showed them, a year ago, which is still current today, shows that a 2% allocation to Bitcoin actually reduces the downside risk in a portfolio. It doesn't increase the risk. It reduces the risk, and it also increases the returns, because 9 out of the last 11 years, Bitcoin's been the best performing asset class out of all asset classes. So if you're a fiduciary, you're almost obligated to add Bitcoin to your portfolio if you know that it reduces risk and increases the returns in your portfolio. And they're finally starting to understand that, or maybe just believe it. Maybe it just was so unbelievable before they didn't believe it.
Some people might wonder how it's possible that a volatile asset can improve risk-adjusted returns. And the big reason, I believe, is that by and large, it's uncorrelated to other assets.
So
so the diversification creates a mitigation against that volatility. And people will say, well, Bitcoin went down when the market tanked in March. Well, during a crisis, correlations all go to 1, right? I mean, bonds, stocks, everything other than the US dollar went down. But over the long run, if you actually take a real analytical approach and you look at it over time, it is quite clear that Bitcoin acts on its own accord in a lot of respects, which makes sense, because it is radically different than any other kind of money that we've ever had, obviously. But it's also an emerging asset class, and so it can grow and become more valuable through up and down cycles, in the same way that the shares of Amazon have increased thousands of fold over the past 20 years through up and down cycles, because it's a thing that grows because it has inherent value, right? I mean, that's how I kind of think about it.
You're 100% right. The reason that Bitcoin reduces the risk in a portfolio is because it's a non-correlated asset. Yeah. It's not negatively correlated, it's just non-correlated. So the Federal Reserve Bank in St. Louis came out with a white paper in January of 2018 about cryptocurrencies. And in their white paper, this is the Federal Reserve Bank, the people that print the money, they said that Bitcoin's best use case was as a diversification tool for investment portfolios, because it's a non-correlated asset class. So even the Federal Reserve is telling us that Bitcoin's best use case is to put into investment portfolios to reduce the risk. And that's what people are starting to use it for. That's one of the major use cases, is risk management.
That would
go ahead.
Add to, in the core of your analysis, Brian, is this idea that when we often debate in terms of the now, we even debate in terms of like the next year, 2 years. We think about regulatory challenges, or we think about mindset. Here's a 70-year-old asset manager who spent 40 years getting to that point. He is not going to take a chance with his career, right? And as soon as you broaden your horizon to 10 years, and then maybe even to 50 years, all of the doubts go away, right? Like, you think about it, if we debate autonomous vehicles right now in the same way that we could debate, Bitcoin as an investment category, and if I said, hey, Alex, do you doubt that 50 years from now, we'll all be in electric autonomous vehicles versus Alex, what do you think about, autonomous, all electric autonomous vehicles? Your answer is very different,
Mhm.
right? And so like, if Brian, you were to ask one of these, asset managers, I get your apprehension right now, but if I came to you 10 years from now, would your answer be the same? I guarantee you the answer would not be the same. They'd be like, oh yeah, we'd be all over Bitcoin. And, we'd have data to prove it. So it's always about, like, we get caught up in cultural and regulatory hurdles when we think about like a year, 2 years, 3 years, maybe even 4.
Yeah.
50?
Yeah, absolutely. And you see this a lot, actually. These are informal, but Twitter poll, if you had $1,000 or $5,000 to invest, you couldn't touch it for 10 years. What would you choose? Would you hold it in dollars? Would you hold it in government bonds? Would you hold it in an equity fund, or would you hold it in Bitcoin? And it could be that, Twitter skews younger or more favorably towards Bitcoin, but, Bitcoin comes out on top. Now, I wish I could take that 10,000, split it into a few different things, because I'm a big believer in American business. So I'd love to have some shares in companies as well. But nobody chooses cash, right? I mean, it's it's an asset that loses its purchasing power over time, and it does that by design. It's supposed to do that, right? So there's obvious reasons why you should consider diversification. I wish we could keep talking. I just realized we're actually at the top of the hour, though I think that was a really interesting, thought-provoking way to end the discussion, which is that when it comes to investing in blockchain or in technology in general, you need to take the long view. You need to look out into the future, and you need to think outside of the box. Brian, your explanation of why people are risk averse when it comes to investing in this because of their preconceived notions or their habits or their career risk is one of the reasons that a lot of people are not successful investors. To be a successful investor, especially in the technology space, you need to not only be comfortable with risk, you need to welcome it, and you need to be able to infer what the world will look like in the future based on some of the green shoots and things that we see today. And I think that this conversation has helped people to better appreciate how to think about this industry and this technology. And for that, I'm deeply grateful, and as I'm sure they are as well. So with that, we are going to conclude today's webinar. I'd like to thank Amit and Brian once again for a frank, candid, open discussion. That was a real pleasure. And I hope we can do it again soon. So thanks, guys. Take care.
Thank you.
Thank you very much.
Thanks.